In today's video, I'm going to talk a little bit about the crude oil market and also the way that you make money with my work. My method is setup plus a trigger equals a trade entry, and then you manage the trade. So for those of you who still don't understand triggers, I'm going to show you an example. So here, this is actually the September contract crude. I'm probably supposed to be changing this soon to October, but for now I still have the September. There were two zones recently on the daily chart that I was watching for possible support. The first one was 46.35 to 48. There were three price relationships here. Then it looks like I had four price relationships, I believe, at the 45.24 to 53 area. It included a 618 of one swing, a symmetrical projection of another, 786, and then there might be another one that's hiding in there. Bottom line is we ended up testing and holding this first area of support. Okay, so that's the setup. Where's the trigger? Well, the trigger comes in where you see a combination of two things. I like to see the moving average crossover after it tests the support, and I also like to see us take out a prior swing high as part of the process, because it would be a pattern shift. So when we trade it down into support, and this does include the overnight data, so sometimes these actually will get triggered in the middle of the night, but bottom line, the first initial signals were when we had this 834 EMA crossover to the upside after it held above key support, and then it also took out a prior swing high over here. Okay, so at that point it was okay to look at the buy side in crude and have your risk definition either underneath this low or underneath that zone. And then you go into the next decisions. There were resistance decisions we watched on the way up, but we did actually clear most of them. So what we had was a setup. We had the trigger that I just showed you on a 15-minute chart, which is actually the aggressive swing trade trigger entry, and we did see a really nice rally so far. But what are the next decisions? Well, you have to look at it this way. If we let's see, if we get the full move off of this swing down into this support decision, your typical target, which, you know, obviously I can't guarantee that we're going to get there, but the typical target is going to be the 1272 of the swing into the zone. And that means it's right around this 5148 area, if we can continue to rally. But you have to look at it this way. You know, we don't always make the targets. We shoot for the targets, we don't always make them. So what else should you do? You should manage the trade, which means as you move into any of the other resistance decisions on the way up, you want to trail up your stops just in case we don't get the target. Okay, because we've had a beautiful rally so far. What shows on the 120-minute chart is, you know, we've got to clear this area next, 48.78 to 94, and then the 49.42 to 58. And if we don't, you might get, you know, or at least suffer a pullback. So should you ratchet up stops? I would. You know, that's the way we have to do it. If we're lucky, then maybe we make the target off of this full swing, and it looks like I may have been off just a couple ticks on the other one, but it looks like the 51.51 area would be the 1272 of this full swing into the zone. So that's what I'm looking at in crude, that we hit and held, but now we have the immediate hurdles on the way up, but if we can push through those, this is my upside target in crude.